foreclosure sign in front of a home, a common sight during the 2008 financial crisis, when bank failures and bailouts shook public trust in traditional finance. In 2008, the world was plunged into a global financial crisis, the worst economic downturn since the Great Depression. Major banks teetered on the edge of collapse, governments spent hundreds of billions on bailouts, and ordinary people saw their jobs and homes vanish. Trust in centralized financial institutions was deeply shaken. It was amid this turmoil that an audacious idea was born, an idea that aimed to restore financial power to the people. While headlines warned of economic collapse, an anonymous figure quietly prepared a new solution in the digital shadows. On October 31, 2008, at the height of the crisis, someone using the pseudonym Satoshi Nakamoto made a modest post on a cryptography mailing list. In that post, Nakamoto unveiled a 9-page academic-style white paper titled "Bitcoin, a peer-to-peer electronic cash system." Few realized it at the time, but this moment would mark the dawn of a revolution. The author, whose identity remains unknown to this day, described a new form of money that required no banks or governments, a purely peer-to-peer currency for the internet. Bitcoin would allow people anywhere in the world to send payments to each other without a third-party intermediary like a bank. Instead of trusting in financial institutions, transactions would rely on cryptography and a network of ordinary users' computers. Nakamoto's proposal built on decades of research and earlier attempts at digital money. But unlike prior projects that failed to prevent double spending or relied on central issuers, Bitcoin offered a breakthrough, a way to transfer value electronically without relying on trust. The white paper outlined how a public ledger, later known as the blockchain, could record every transaction, with network participants collectively verifying the ledger rather than any single authority. Every transaction involving Bitcoin is tracked on the blockchain. Unlike a bank's ledger, the Bitcoin blockchain is distributed across the entire network. No company, country, or third party is in control of it, as one explainer puts it. This ingenious design meant no central bank could manipulate the currency, no company could censor transactions, and no single point of failure could bring the system down. Bitcoin was conceived as decentralized digital cash, money by the people, for the people. Behind the scenes, Satoshi had already written the code to turn this vision into reality. On January 3, 2009, the Bitcoin network went live when Nakamoto mined the very first block, known as the Genesis block. In that inaugural block, Satoshi embedded a brief message that spoke volumes. The Times, March 1, 2009, Chancellor on brink of second bailout for banks. Taken from that day's newspaper headline, this message was a commentary on the unstable banking system and government bailouts of 2008. It was as if Bitcoin's creator were timestamping its birth with a defiant statement. Bitcoin was born as a direct response to the failings of the existing financial order. With the Genesis block, 50 Bitcoins were created, the first coin-based reward, though at that moment, those coins had no real-world value. The open-source Bitcoin software was released to the public a few days later, and the era of cryptocurrency quietly began. In Bitcoin's very early days, only a handful of enthusiasts and cryptography hobbyists even knew it existed. Satoshi Nakamoto continued to refine the software and correspond with other programmers online, fostering a small community around his invention. One of Bitcoin's earliest adopters was Hal Finney, a renowned cryptographer and cypherpunk. Finney downloaded the Bitcoin program on January 9, 2009, the day of its release, and soon became the recipient of the first Bitcoin transaction. On January 12, 2009, Satoshi sent Finney 10 BTC as a test, marking the first ever transfer of Bitcoin from one person to another. At the time, those 10 Bitcoins were worth essentially nothing. Bitcoin had no established market price yet, but this simple transaction proved that the system worked. A new form of money was up and running, powered only by its users and cryptography. Throughout 2009, Bitcoin remained experimental and largely unknown outside of niche circles. Early participants ran the software on their home computers, mining Bitcoins out of curiosity, effectively volunteering their computing power to secure the network and mint new coins as a reward. For the first few months, Bitcoin had no quoted value in dollars. It was simply a fascinating experiment in decentralized money. Developers and users communicated on forums, improved the code, and slowly but steadily, the word began to spread. In October 2009, an early Bitcoin user established an exchange rate by trading Bitcoins for fiat currency on an online forum, calculating that 1 BTC was worth about $0.0007 US at the time. This informal exchange rate gave Bitcoin an initial value. fractions of a penny, highlighting just how novel and risky the idea was perceived to be. As Bitcoin entered 2010, its tiny community continued to grow, and with growth came the first real-world economic transactions. On May 22, 2010, a Florida programmer named Laszlo Haniec made history by trading 10,000 BTC for 2 Papa John's pizzas. Frustrated that he had lots of Bitcoins but nothing to spend them on, Haniec offered his coins on a Bitcoin forum in exchange for pizza. Another user took him up on the deal, ordering 2 pizzas to Haniec's door in exchange for the 10,000 Bitcoins. At the time, this amount of BTC was worth only about $40 USD. That ordinary pizza delivery became legend, Bitcoin's first real-world purchase. Since then, Bitcoin Pizza Day is celebrated every May 22nd by cryptocurrency enthusiasts, and those 10,000 BTC, virtually worthless in 2010, would be valued in the hundreds of millions of dollars a decade later. The pizza story illustrated Bitcoin's early journey from an obscure tech experiment to something that had real economic value. It was a proof of concept. Bitcoin could be used to buy things in the real world. By this time, more people were downloading the Bitcoin software and joining the network. The mining process, which in 2009 could be done on a normal PC, started to get more competitive as Bitcoin's popularity in tech circles grew. In 2010, new exchanges and marketplaces appeared where users could trade Bitcoins for dollars or other. In those first 2 years, Satoshi Nakamoto remained actively involved, writing updates to the Bitcoin code and corresponding with users via forums and emails. He was the project's de facto leader, though he maintained an aura of mystery, never revealing personal details and always focusing the discussions on Bitcoin's development. Then, in late 2010, Satoshi began to step back. He handed over project responsibilities to other early developers, notably Gavin Anderson, who became lead developer. In April 2011, Satoshi sent one final message to a collaborator, stating that he had moved on to other things, and that Bitcoin was in good hands without him. After that, Satoshi Nakamoto disappeared from the public scene entirely. To this day, the true identity of Satoshi remains unknown, and he, or she, or they, has never been heard from again. The creator vanished, leaving behind roughly 1 million mined Bitcoins that have never been touched, and leaving the community to carry the project forward. The mystery of Satoshi Nakamoto became a compelling part of Bitcoin's mythology, an almost legendary founder who lit the spark and then faded away, allowing his creation to grow beyond him. Even without its creator, Bitcoin's journey was only beginning. By 2011, the currency has started to gain real traction. Bitcoin's price, which had been well under $1 for most of 2010, began rising as more people discovered the cryptocurrency. It reached parity with the US dollar in early 2011 and then climbed further, fueled by growing interest and occasional media coverage. Importantly, Bitcoin's code was open source, meaning anyone could inspect it or copy it to create their own digital coin. Soon, inspired by Bitcoin's success, other cryptocurrencies began to appear. The first so-called altcoins, such as Namecoin and Litecoin, launched in 2011, adapting Bitcoin software for slightly different purposes. While these early alternatives were small projects, they marked the start of a much larger trend. Bitcoin has shown that decentralized digital money was possible, and this opened the floodgates for innovation in the years to come. What began as an obscure white paper in the midst of a financial meltdown has grown into a global phenomenon. Bitcoin's origin story, rooted in the 2008 crisis and born from a desire for a trustless, decentralized currency, has proven foundational for an entire new industry. Today, there are thousands of cryptocurrencies, but they all trace their origins back to Bitcoin's launch in 2009. The themes that Bitcoin introduced, decentralization, economic empowerment, and technological innovation, have since permeated finance and technology. In the wake of Bitcoin, developers have created new cryptocurrencies and blockchain platforms that expand on its ideas, from smart contracts to decentralized finance. Yet Bitcoin itself remains the flagship, the most valuable and widely recognized cryptocurrency in the world. Often dubbed digital gold, it is now seen not only as a medium of exchange, but also as a store of value and an inflation hedge, held by institutions and individuals alike. The economic impact of Bitcoin's arrival is profound. It demonstrated, for the first time, that money could exist independently of nation-states and central banks. No government or corporation controls Bitcoin. Its supply isn't determined by a central bank's policy, but by transparent code. This alternative model of money has sparked debates about the future of finance and influenced discussions on monetary policy, privacy, and the role of banks. For people in countries with unstable currencies or limited banking access, Bitcoin offered a new way to participate in the global economy with just a computer or smartphone. It has empowered individuals by giving them an option to be their own bank. securing and transferring wealth without needing permission from any authority. Equally important is the technological innovation Bitcoin introduced. The blockchain, Bitcoin's underlying distributed ledger, is a concept that has extended far beyond digital currency. Industries from supply chain management to art and entertainment are exploring blockchain technology to create tamper-proof records and decentralized networks. All of this stems from the breakthrough that the Bitcoin white paper delivered, solving the puzzle of creating digital trust without a central mediator. By combining cryptography, game theory, and clever incentives, Bitcoin showed that a network of strangers around the world could collectively maintain a secure financial system. This innovation has been compared to the early internet in its significance. Just as the internet changed how we share information, Bitcoin's blockchain has changed how we think about exchanging value. In little over a decade, Bitcoin has transitioned from a niche experiment into a household name. Major businesses and even nations have taken notice, with some companies accepting Bitcoin for payments, and one country, El Salvador, even adopting it as legal tender. While opinions on Bitcoin vary, supporters hail it as the future of money, while skeptics point to its volatility and use in illicit activities. There is no denying that it sparked a new era in finance. It demonstrated that trust can be shifted from institutions to algorithms, and that communities can manage money themselves via decentralized networks. Bitcoin's origin story is a compelling tale of innovation emerging from crisis. It's the story of how, in the ashes of a broken financial system, a pseudonymous visionary leveraged technology to propose a bold alternative. What started with Satoshi Nakamoto's email and a small network of believers has grown into a worldwide movement. Decentralization, economic impact, and innovation remain at the heart of Bitcoin's legacy. As the first cryptocurrency, Bitcoin built the foundation on which all other digital currencies stand. And regardless of what the future holds, the creation of Bitcoin in 2008 to 2009 will be remembered as a watershed moment, the point at which the world was introduced to the idea that money could be reinvented. Bitcoin's birth marked the beginning of the cryptocurrency revolution, a shift that continues to unfold today, proving that even in the darkest economic times, innovation can light the way to new possibilities.